To open the conference today, I would like to invite Bjorn Forfang, Deputy CEO of Cfa Institute. Bjorn oversees member value, advocacy, service delivery, research, relationship management functions, as well as Cfa Institute's regional capabilities in APAC, EMEA, and the Americas. Bjorn has more than 20 years of client and relationship management experience, including 14 years as managing director at UBS, where he held global relationship management roles in New York and London. Prior to UBS, he held senior level roles including Dresdner Bank, Greenwich Associates, JP Morgan, and with the Royal Norwegian Ministry of Foreign Affairs in Oslo. Bjorn holds an MBA from Harvard, a JD from University of Oslo. Please join me in welcoming Bjorn to share his thoughts with us today.
Thank you, Radna. Always wonderful to be back in Atlanta and the state of Georgia, and especially at this exciting conference. Do you hear like double feedback here because I have my separate mic on, or is it okay? All right. So, and I look forward to spending the whole day with you, listening to exciting speakers, covering very, very important topics for our industry. And before kicking off, I just want to share a few more general thoughts from the Cfa Institute around some of those issues, because I believe that our industry and our profession, in many ways, is at a crossroad. And at this conference, you are pointing to a couple of them, but I would love to share with you some of our thoughts about what the issues are, and also potentially what we need to do as an industry and as a profession to address some of those difficult and thorny issues. Now, at the Cfa Institute, we're known for managing 3 very difficult exams and awarding the Cfa Charter. But we are much more ambitious than that. We have a lofty mission to lead the investment profession by promoting the highest standards of ethical and professional standards. And we also have an even loftier end to that mission statement, and that is for the ultimate benefit of society. And it sounds lofty, but it is sincerely felt and meant, and I will get back to you in a few seconds about what that really means, because we're not doing this just for ourselves. We're also doing it because we think that this is a good thing for society. And one of the words in that mission statement is global, and I think that is an important part of what we do, if not critical. So the Cfa Charter and the Cfa Institute started in the US and Canada more than 80 years ago, but we administered the first test in 1963. So it was an American or North American effort. Now it has become the gold standard for achievement in professional financial services worldwide. And of course, most of the members are based here in the Americas. We have 60% of our members globally are here, but only 33% of our candidates. If you go to APAC, especially China and India, they represent about 20% of our membership, but between 50 and 60% of all of our candidates. So the nature of our membership will change over the next several years from being a predominantly developed market, US-centric, to becoming an absolutely global effort and a global movement. And we now have societies, we have 151 societies around the world. We have members in 150 countries. So we're in basically every corner of the world. We just announced a new society in Uruguay, and the next societies we will announce would be in Kazakhstan, Oman, Zimbabwe, and Colombia. So I challenge you all to find those countries on the map, but they're there, believe me, they're there. But it sort of explains how global this organization now is. And when we talk about market integrity and doing good for society, obviously we do that well in developed markets. But in emerging markets, it's almost life-changing. And that's why we get support from the central banks, from the Ministry of Finance, and from the regulators in developing markets, because they feel like this is one way of pulling their capital markets into the global financial ecosystem and significantly raise the level of professionalism in their local markets, predominantly to address issues of basic issues such as corruption and graft and rent seeking and those kind of things. So our business is definitely global. But even if it is global and even if we are in every corner of the world, what we're trying to accomplish, our main strategies are still the same. And we have that in 3 different buckets. Number one thing is to educate the future of investment professionals, which is done mostly through the CFA program. The second one is when they have become charter holders, we will try to help them develop careers and their professional development throughout their careers. And the third one is related back to the mission that I showed you a few seconds ago, and that is building market integrity. And I think that is probably of all 3 the most important, but also the most challenging. And that is really our social mission, is to build market integrity, to fight for investor protection, to fight for regulatory regimes that promote fair and free allocation of capital to those needs that will get societies to prosper. And so we are advocates for better and fairer financial systems around the world. But it's very difficult to be an advocate when you represent an industry that is held in fairly low regard. And our opinion polls and other polls that we have done shows that the financial profession is simply not trusted. Some of that, I think, is a result of a misunderstanding of what the finance profession is really all about. There is a gigantic difference between trying to find better returns for retirement assets and then boiler room crooks that you see in Wolf of Wall Street. But in the public, they view this as the same. And we need to educate the public on what the finance profession is and what it actually does for society. So we have a trust gap, and I will get back to that in a few seconds. But the industry also has a couple of challenges, big headwinds, that I think is very challenging, not just for asset management, but also for insurance, for wealth management, but also for investment banks. And I'll leave you with a few thoughts on what I think the big challenges are for this industry in the future. One is the move from active to passive management. And the reason you see this sort of secular move in that direction is because active management, to a very large extent, has not delivered value after fees. Fees are too high, the portfolios are too diversified, and the sales practices for them are not good enough. So you will see a continued move from active to passive unless something happens on the fee side. And that's why you see Vanguard and BlackRock and other passive managers in their ETF products specifically see almost all the asset flows going into that direction. A second trend, which is sort of a part of the same thing, is the rise of quantitative products, smart beta, many other quantitative products. There are chipping at alpha sources that were typically uncovered by Cfa Charter holders and other finance professionals around the world. And computers can now do a lot of this work better and cheaper than human beings. So you see a significant increase in the number of products, but also as percentage of assets under management from quantitative strategies. Both of those things create significant margin pressure on everybody in the industry. The pressure has not been as sort of felt as I thought it would be, partly because we're in the process of rising markets that sort of tend to mask some of those issues. But I think we're in the process of seeing a secular margin pressure on the industry that has created, among other things, industry consolidation, because firms are trying to build scale in distribution, technology, in product, so they can try to meet some of that cost pressure. So you see the industry either going big and diversified or very specialized, where there's certainly opportunities. And the firms in the middle are subject to most of the margin pressure and the consolidation that we're seeing in the industry. But there are other issues that the industry is facing. Now, fintech has been a part of financial services since the very beginning of financial services. But I think we're at a point now where fintech could have significant disruptive properties, not just in the way of managing the industry, but also transforming the industry. And we see some of that coming through China, I think, where the tech companies are taking over financial services in a way that I think it will eventually happen here in the US as well, but that puts pressure on the very business model, and we haven't seen that before in the fintech. And then of course you have regulatory issues in Europe and here in the US as well, putting a lot of pressure on the industry. I'm still incredibly optimistic on the industry because assets under management will double over the next 10 years. And there is need for people to advise your clients, institutional and individual clients, for the future, how to manage their assets in a better way. So I'm very optimistic on the future, but only if the business actually change. And so the question is, what does the industry look like going forward? And we're not going to spend too much on this chart, but it's a classic 2x2 where you have the industry benefit on the y-axis and then the societal benefit on the other axis. And of course you want to be in the top right-hand corner. We all believe that we have to create a benefit for the industry itself, but I think it's even more important going forward is to come up with strategies that demonstrate that the industry is also benefiting society. And we need to connect the financial industry with the very purpose of the financial industry, and that is answering the question or finding better answers for the question, what is finance really for? And I think if you look at society and prosperities around the world, there is a clear connection between fair and free allocation of capital, where investors and ideas and capital all meet in a way that has as few externalities as possible. But it's that purpose that is really important. And I think that professionals and practitioners in the industry has not been good enough in explaining the purpose of what we're doing and why are we doing what we're doing. So it's we're not curing diseases here, so we're not going to get ahead of ourselves, but I think it is a noble profession to work on improving returns for retirement assets for people who scrape together college funds and get high returns for those that are not given away in too high fees or complex products that are not suitable for the investor. So I think that this is a noble profession, but we have to behave differently and we have to communicate that in a better way. And when we ask finance professionals around the world, it is clear that this is something that they want to see more of. Only 11% of finance professionals actually believe that what they're doing is benefiting society. But more than 50% say that it should, but if we put together, well, it could be contingent on stronger principles in the industry. And what it always seems to come down to is trust. And we believe that the trust gap is at the core of what this industry needs to address. And trust comes from basically two things. It comes from credibility and it comes from professionalism. The credibility is about license to operate, making sure that the practitioners in the field are credentialed. So that could be the Cfa Charter or other credible credentials to make sure that they have a license to operate and that they hold themselves accountable to the highest professional standards possible and ethical standards. The professionalism, on the other hand, is probably even more important, and I'll spend a few minutes on that. Obviously, it is to project competence and seriousness about doing what you're doing, and of course the highest professional standards. But there are other things this industry can do to project professionalism and be a better sort of servicing the public in a better way. And this comes right back to the very purpose of this conference. And I travel around the world and I meet with industry leaders and regulators all over the world. And if there's one issue that is coming up all the time, it is diversity and inclusion. And this industry is, it's too white and it's too male. And I think if you look at the future of finance, I think this is one of the fundamental issues that we need to address from a business perspective, if nothing else. Surveys shows that 50% of wealth assets in America in 2020 will be controlled by women. So how can we as an industry project trust and communicate values when 85% of those who are working to communicate those values are male and 50% of our clients are women. That is a disconnect that I think is going to be very difficult to address or to come around with unless you do something fundamental. Then that's on the communication side. Then on the product side, you know, one of the fundamental sort of tenets of the investment profession is diversification. How can you produce alpha if you lack the cognitive, you know, diversity that comes with having more diverse teams? You know, if everybody looks the same or behave the same with the same background, how can you possibly think that you have explored all the alpha opportunities that exist in the marketplace? Only, I think, 10% of mutual fund assets are managed or co-managed by women, only 1% solely by women. And of course, the numbers for males are, you know, the inverse of that. And I think that is a fundamental issue to address. So thanks to the society here for putting this front and center. I think this is a very critical issue. I think financial literacy is an issue. I mentioned earlier that it's very difficult for the public to see the difference between the various aspects of finance and also understanding like what is finance for and what it can help them achieve their goals. And here in Atlanta, the society has put a lot of effort into it. It's one of the leading societies in the world in developing programs for advancing financial literacy. And I think if we as a family of investment professionals put a lot of our volunteer efforts into this, I think that also has something to do with the trust gap and closing the trust gap. The last point, which I think is probably the most important thing, is that anybody who is holding themselves out as a financial advisor needs to be bound by a fiduciary duty. A fiduciary duty that means that the client's interests come before your own and for your company. This industry is one of those few professions in the world where it's okay that your firm's interest goes ahead of your client's interest. So it's okay that a product is suitable, but not that it is in the best interest. And I think that is a fundamental flaw in the way this industry is structured. And I think that is one of the reasons why you see these unhealthy sales practices and why you see the fee structure the way it is. And that's why the Cfa Institute is advocating strongly to the SEC to produce a fiduciary standard that involves everybody who's giving financial advice, regardless of how you spell that word. So I think that is a critical thing. So these are some of the ways that we work with to address the trust gap. And it's not enough that we talk about it. We're trying also to tell the world about this. So we have launched a global advertising campaign where the tagline is let's measure up. And that is a call to the industry to measure up to the same standards that we hold ourselves to, which is the highest ethical and professional standards combined with the technical excellence that comes with Cfa Charter holders. But the whole industry needs to hold themselves to the same standard if we're going to be a trusted industry for the future. And so I'll leave you with those thoughts, and I'm glad to see that some of those important aspects of what I've been talking about is embedded into the schedule for today's conference. And I'm going to be here, and I look forward to hearing some very impressive speakers later on. And thanks for listening, and have a good conference. Thank you.